Aloha and welcome to Java. Thank you all for joining me. This is for Wednesday, October 25th, 2023. And I'd also like to give a special welcome and thanks to Jules for always being here every single morning, and Dave and Doug and my quad man, as well as Alan Greenspan, my favorite feral cat, Fellowship of the Mystery, Stav, Lance, and Jeanette. I appreciate you all being here and anybody else that I might be missing with this, but I appreciate you so much. It's keeping me going. So with that, let's go into what's going on today. There is quite a bit of, I'm going to say, strangeness going on. So starting off with our favorite risk indicator, which is still in the extreme territory, the MMRI, it's above 320 again. And the two main components of that, the dollar relative strength as well as the US 10-year, they're rising again. And as these rise, they're kind of normalizing at higher levels. They will put pressure on the stock market and equities. And this kind of from there will follow through. So as we see right now, stocks kind of went into a positive territory yesterday, which I don't expect to last much longer. So we've got the volatility index rising. Gold and oil did pull back. Those will resume, I expect. And I'm going to go over a couple of stories that will support that. Of course, all of this, none of it's financial advice. I could be wrong, but we are watching these indicators very closely, especially with our debt market. We've got the futures are in the red, showing the general sentiment as well. So with this kind of a bit of a surprise is Bitcoin is rising. And it's showing itself to be a bit of a safe haven as well. At the moment, it's going to hit some resistance, and I think it's going to pull back for a little bit. However, it is really showing some strength, and it's not just because of the ETF. So we're looking at treasury yields, saying they're nudging higher as they're hitting closer to that 5% mark again at the 4.875 right now. And we'll watch that. And other news, seems unrelated, but as far as the United States Speaker of the House, they've got another nomination, and hopefully we'll have him through. This affects quite a bit because Congress cannot get anything through without a Speaker of the House, so they really need to sort this quickly because they're heading for, right now, the U.S. is kind of heading for some more credit ratings drops because of this, the political instability. So our sentiment for the markets in general right now are neutral to negative. We've got some larger company earnings coming in. Boeing is before the open today. And so these will provide some short pumps, but the markets could really head back. We've been in a larger negative trend, longer term, by the end of the day. And we are getting some data before the market open Thursday, tomorrow morning. So if you have longer term swing positions, position yourselves accordingly by this afternoon. So for the calendar, we've got Boeing prior to opening. We're also looking at Facebook earnings, and the Bank of Canada is coming out with their rate decision. We've also got Jerome Powell speaking at 4:30 this afternoon after the close. So we're expecting new home sales at 10 a.m. I don't expect these to be very good. So we'll watch. That could be a potential market mover at that time. And then tomorrow, everything that's coming out prior to market open, and these are larger numbers. So we've got our gross domestic product, initial jobless claims, goods orders, trade balance, retail inventories, and then after market open, we've got pending home sales. So tomorrow could be a very large market mover. We'll keep on top of that. So we've got some oil stories here that I'd like to bring up. They're now saying that there is a risk of an oil shock rising due to the Mideast war. And this is due to PCA research. Well, they're kind of, the more important thing is to watch this language, because using specifically quote unquote oil shock is reminiscent of the 70s. So they're kind of preparing what was going on, that Nixon era, and what happened shortly after that, not just with the inflation and what else was going on at the time, but that is also when we kind of decoupled from gold. So this, to me, this is the first that I've seen in mainstream media of a harbinger coming for either repricing or the reset, which is inevitable at this point in time. So we've also got this story saying that oil prices are stabilizing amid the shrinking US supplies and weaker demand. So demand is weaker. However, US supplies right now actually are stable. And what we've done basically is kind of replaced Iran with Venezuela. And so we spoke about this the past couple of days with the sanctions. And there is another story also how, because of the quote unquote war in the Middle East, that the United States is going to kind of tighten up on their sanctions on Iran. And basically, it's because we've replaced them and don't need them as much as we used to. So now that we've got Venezuela as a partner, I do expect them to sanction Iran a little bit more. Maybe too late, though. So, as far as central banks, we've got a couple of things going on, not directly central bank, but for China. Country Garden, they determined to have defaulted on the dollar bond. So, this all plays into that debt market on the overall. And this could have repercussions in the US equities market this morning, depending on how investors view this, if they see it as a large one or if they just kind of brush this off. And they really could do either. So, we've got the Eurozone banks tightening their credit standards. Well, we knew that they're doing this. They're having issues with getting loans and then also with the personal debt. The defaults are beginning to pile up, not just in the Eurozone, United States, but they are becoming a tidal wave. So we've got Israel's central bank warning of an economic hit, blaming the war, but really this was starting prior to that, as we all know. But the war is definitely not helping in that aspect where they are. We've got a little bit of a surprise here. Not really to us, because I've been talking about West Africa, and Africa is getting out from under the colonialism, mostly from under France and the EU. And they're looking for other trade partners. Well, Ghana is now trade partners with Russia in their native currencies. So they're using the mirror payment system, which is direct with the Russian rubles, and they are resource rich. We've also got this kind of playing into the war story, but Russia intercepted US bombers. So they're saying a pair of nuclear capable B-1Bs were detected. So no airspace was violated or other major things happening. However, they were headed there and the US planes did have to reroute. So, according to Bloomberg, this is just leave in the comments what you think about this one. They're saying US consumers are on more solid footing thanks to lower interest rates and loan forbearance programs during the pandemic. So, this is kind of looking backwards at data from before, and they're floating this out now because they want you to think that the US consumer is still strong. And we're showing cracks all over where it's very weak. So I've got one other story that I really want to bring up because it's not what it seems. So they're talking about Frontier Airlines overhauling their frequent flyer program. If you haven't noticed, there were similar stories also with Delta, as well as American Airlines, all changing their frequent flyer program. Why is this important and what is it leading back to? Is actually credit cards. So why they are overhauling these programs is because it comes from the fees that every time you swipe your card, they take a little portion of that and they put that into their frequent flyer programs. They kind of bank that money, and it's kind of like them having a savings account that they don't have to pay for until you actually use those miles or their program. And they can also change the rules on those. So this all ties back to weakening credit cards, and they're charging like exorbitant amounts because the rates right now are above 20%, as we were talking about yesterday. So just one more sign that the credit card companies are crumbling, and they're fighting this because if the credit card companies lower these fees, then they will have to get rid of these programs. So we got a couple of lava updates, and I've got a special shout out to my friend. I know you're watching this and you're down here, and I just want to thank you so much for the work that you do, because this story is about the US Border Patrol on high alert for basically militants and terrorists that are coming in through our border in the south. And I'm going to wish you blessings and safety, my friend. So we've got another story of the quote unquote Davos in the desert. And they're still gathering this role, the tops, the ultra rich, ultra wealthy, steering clear of the Israel Hamas conflict. Well, I don't know if steering clear of it is appropriate, kind of, I would rather say directing it from afar, because these are the people in charge and they want to control everything. They do control everything. And that kind of follows into our last story, which is this is a report from the United Nations, which is really America plus a few friends. So the UN did this study saying that the environment is at a tipping point that could have irreversible consequences. So I like my environment as much as the next person, but the way that they're going about this is they're using this as a weapon against normal people and control, because they can implement this any way that they want to as far as the environment. And it is just anything with this type of environmental label should be looked at twice to see what the real story is behind it. So that's all I have for you today. And with that, I wish you all a green trading day, just a wonderful day in general. Thank you all again for being here with me. And until I see you again, my friends, stay free.